Morning, it's 30th of July. I'm Jason Sen from daytradeideas.com. I'm looking at stock markets again. About 2 weeks ago, I was warning of a potential head and shoulders pattern in the European stock markets, and this call was a little bit too early because since then we've continued a little bit higher. We're looking at the Eurostoxx 50 cash index chart at the moment, but this pattern's still valid. As you can see, at the end of last week, Wednesday, Thursday, Friday, we got some more bearish looking candles. We tried to move higher, but we closed lower on those days. Yesterday included, actually. Yesterday, Monday the 29th, we saw another one of those attempts to stab higher but close lower. Okay, so we're looking at this head and shoulders pattern here. Now, if we are seeing a top the end of last week, beginning of this week, to this rally, which has lasted a good 2 weeks from the middle of July, then this head and shoulders pattern is starting to play out, albeit with the right shoulder slightly higher than I'd expected. So we've got a trend line in here, which I'm just trying to highlight. That support comes in today at around 27.40. So if we start to break below yesterday and Friday's low, which is in the 27.36-33 area, we could start to be in trouble here and trigger some profit taking, and at least come back to the 200-day moving average at 26.51. We've also got some Fibonacci support. If I just scrunch this up, you can see around 26.35. So 26.50, 26.35 could be a realistic target over the next few days or couple of weeks for Eurostoxx cash index, and we'll have to see what goes from there. It's not until we break the neckline, which is all the way down at around the mid 26.5s, that we have confirmation of this pattern, and that would then send us again significantly lower, probably something in the region of another 350 points from the 24.5 area. But that's just something we need to watch as we head towards the autumn. This is a daily chart of the DAX 30 cash index. So again, we've got a similar sort of thing, slightly more lopsided head and shoulders pattern, but it's still a head and shoulders nonetheless, in my opinion at least. We've got a trend line going back a couple of weeks, which shows the rally that we saw, and we're just breaking below that now. The candles are starting to get more bearish, as you can see, and I've put these red curves in to try and highlight the head and shoulders pattern. Again, if we start heading low, we've got 100-day moving average at 80.55, and then the 200-day moving average at 77.90 ties in with the neckline to this head and shoulders pattern that I think is forming. So these are some levels to look out for. Really only a break above this trend line now, which comes in around the 8400 level. We'd need to see a close above 8400 at least, and preferably above 84.15, which is the high for this little bounce here, before I'd change my view. Just looking at those daily stochastics starting to get a little bit more negative there as well, so that sort of backs up the theory. FTSE 100 cash index chart, daily chart, different picture, not really head and shoulders here, but you can see that we could be forming a down channel. If we look at this trend line up the top here, it's pretty parallel with this one down the bottom. We've got this uptrend line which has clearly been broken. It was broken back in early June, in fact, and we managed a really nice bounce back up to retest it. And 3 or 4 days, 5 days even, we tried to get through there and we couldn't manage a decent close above it. And now we're starting to ease back and breaking this shorter term 2-week trend line here, or a month-long trend line, I should say, here. So really starting to look more negative again. If this is a channel which is going to start playing out, then we're going to head towards the 100-day moving average at 64.55, and then continue down to the 200-day moving average at 62.44. We've got this other trend line which I can just show you just below 6200, or by the time we get there, that will be closing in a little bit on the 200-day moving average. So again, FTSE, bit of a negative picture. Daily stochastics are confirming that they've turned quite negative. Just bulls need to be very careful here. I think we could start to see a drift lower. I guess a lot depends on Friday's non-farm payroll number.